What's going on, folks? Welcome to the TradeWell podcast, brought to you by TradeWell Management. I am your host, Donovan Marquez, the podcast where we discuss everything trading these financial markets, as well as acting as a personal trading journey and road to profitability. Thank you for tuning in, and I hope you enjoy the show. What's going on, everyone? Welcome back to the TradeWell podcast. I'm Donovan Marquez, and today we are talking about something super important: support and resistance levels, two of the most useful concepts for any trader. If you've ever looked at a price chart and noticed certain levels where price just seems to get stuck, that's support and resistance at work. Knowing where these levels are can help you make smarter trades by spotting potential buy and sell points. Let's break down what support and resistance are, why they matter, and how to use them. So let's dive right into it. Let's start with the basics: support. Now, support is a price level, where an asset tends to stop going down. Think of it like a floor. When the price falls, it hits that level and often bounces back up. It is a sign that buyers are stepping in because they think price is low enough to start buying. On the other hand, the flip side of that coin is resistance. Resistance is a price level where an asset tends to go up and stop going up. Now imagine it as the ceiling. Support is the floor, resistance is the ceiling. It often hits that level and struggles to go higher. This happens because sellers come in thinking it's a good time to sell. All right. Now, why do support and resistance matter to us as traders? Well, they help you decide when to enter or exit a trade. Okay. And you might hear this throughout, wherever you're listening, buying at support. Okay. When an asset price approaches a support level, it could be a good buying opportunity. If the price has bounced off that level before, there's a chance it could do it again. Okay. You also might hear selling at resistance. When an asset's price reaches a resistance level, it might be a good time to sell if the price has struggled to go past that point in the past. It might struggle again. Knowing these levels can help you avoid buying too high or selling too low. Okay. Now, how do you actually find these levels on a price chart? Well, I'll give you a few tips. Okay. Number one, look for repeated levels. Start by looking for price levels where the stock has bounced multiple times in the past. If you can see a certain price that the asset keeps hitting before going back up, that's a support level. Similarly, if a stock keeps hitting a certain high point and then dropping, that's likely a resistance. So a good way to try this is to go to something like the daily chart, zoom all the way out. Look for the highest peaks over time and line those up just to get a kind of feel for what support and resistance looks like. So when you're on the daily chart, zoom all the way out, look for all the peaks, line them up, and look for all the valleys, line them up. And that is kind of your general consensus of support and resistance. Okay. Number two, use tools like horizontal lines. Many platforms like TradingView have tools that let you draw horizontal lines on your chart. Place these lines at price points where you notice support and resistance so you can quickly see them in the future. Okay. Just like I said, zoom out, place your lines on the chart, and kind of go from there. Now, number three, this kind of goes along with what I just said. Check different time frames. Support and resistance levels can look different depending on your time frame. Try, like I said, looking at the daily charts for the big picture of support and resistance. Then you can zoom in on shorter time frames like the 15-minute or the 1-hour charts for day-to-day levels and make your general consensus based off of what you see. All right, moving on. Let's talk about how to use these levels in real trading. Now, let's give you an imaginative scenario, okay? So bear with me here. Imagine, let's say, a stock, right, is moving down, all right? It's moving down. You see it moving down, and it hits a support level of, let's say, $50. You're looking at the price, and it says 50. Keeps bouncing 50, 49 point, 49 point, up 50, 49 point something, up back to 50. If it's bounced off that $50 level several times in the past, that could be a good point to buy in, and you might have a good chance it will go back up. Now, on the flip side, if the stock is climbing and it approaches $60, where it's approached that level before, you look to the left of your chart and you see that it's hit that level before in the past, you might want to consider selling or at least being cautious about buying, as it might struggle to go higher. Okay. But remember, guys, support and resistance are not guarantees. Prices can break through these levels, so don't rely on them alone and just use them more as a guide, I would say. Putting it all together, like some moving averages, support and resistance, start to develop a trade plan, okay? And start to develop a strategy based on these episodes, okay? But that about wraps it up for our discussion on support and resistance levels. Now, these are powerful tools for day traders and can help you feel more confident about your entry and exit points. Practice spotting these levels on your charts and see how the prices react to them. It's a skill that gets easier over time, okay? In the next episode, we'll talk about how to set up stop loss and take profit levels, okay, which is pretty interesting. These are the tools to help you manage your risk. Trust me, you don't want to miss it. If you enjoyed today's episode, don't forget to subscribe and leave a review anywhere that this podcast is hosted, and share it with other traders. Thank you for listening, guys. As always, stay sharp, stay steady, and trade well. We'll see y'all on the next one.